What's up, everyone? This is Cheech back here from the Cheech Radio channel. Sorry, I've been MIA-ing for quite some time, missing action. Been busy with some stuff to do at work and lots of reading, and especially since the stock prices are actually crashing downhill, so doing some research here and there. But now I just think that I'll do like a short video update on my current P2P decision. So yeah, let's move on to the next segment. And ta-da! This is my decision. That is right, folks. I am actually gonna exit the P2P market, but for now, unless they come up with better investment items or tools that can actually benefit me more in this current economic climate. So yeah, without further ado, let's go through what my thoughts are. So in the past couple of weeks, I think a lot of things actually had happened. So let's go through one by one. So starting, actually the order isn't quite right, but let's just briefly look through again. So basically, we know that COVID-19 has actually struck us. Apologize for the bubble not being complete for you to see the whole graph, but I think you can roughly tell that it's actually the coronavirus case graph, where the y-axis is number of cases and the x-axis is the timeline. So approaching the mid of March, as you can see, the cases are actually spiking up again in a very, very drastic increasing manner. Due to this as well, we can see at this part here, this sphere, this earth here, that the red parts are countries which are actually doing quarantines or lockdowns. So apart from the virus actually striking us, we actually have the oil prices crashing down. It's actually not clear here, but around 2020, I think most of us have seen actually oil prices actually have dropped down to, I think, was it below $30 per barrel, 30 USD? Yes, that's one. So the virus, coupled with the oil prices, has actually led to economists all over the world actually pointing to a global recession happening right now. If we just do a simple Google search on it. So my thought process on like why I'm doing P2P is because, okay, so basically you talk about how the virus was striking us. We've got the oil price uncertainty since it's got a big crash. So the economy panics, there's a global recession kicking in. Businesses get hit hard because as you can see, people are getting locked down. So people are actually just buying like goods which are like essential just for survival, like food, things to do with like sanitizing and medical supplies. So with businesses not being able to make money out of customers, so they're not prepared to be able to pay off their long-term loans. So we can start to expect more loan defaults kicking in. And knowing that P2P money lending relies a lot on the loans coming in and not defaults happening, thus ruining the income to investors. I thought that it would be best for us investors to actually leave this space for now. Unless of course P2P money lending, I think there were a few companies actually doing plans or investment plans which actually cater to investors who want fixed income. So I believe like instead of the usual 12 to 18% of per annum that you're getting as the typical P2P investor, they've come up with special plans that actually offer you a 6%, which is lower than the usual, but it guarantees you that 6% per annum income. But that said, I'm not sure whether that plan is going on for now, due to this economic climate, but I think I've seen it like in the past month, I think past 6 months, yeah, around that. But yeah, do check that. That's it. So what am I doing right now? I'm actually exiting P2P fully. I'm actually stopped all my auto investments. I'm actually recovering my money every month. Like every month, once the money starts kicking back into my P2P account, I transfer them all into my bank account. I'm consolidating all my investment funds. I'm expecting actually more drop in the stock market based on the news, the headlines, the psychology revolving around all this uncertainty in the economy. I'm also strategizing my portfolio allocation, meaning that I'm actually looking at my watch list to see what companies actually putting in. I mean, in my case, I'm actually having like a top 10 watch list of companies that I want to hold in the next 5 to 10 years. We're looking at this current situation as being very uncertain. We don't know whether the virus is going to mutate and cause even greater urgency in it. And yeah, once I've strategized that, I'm gonna fire away at stocks with my remaining bullets. to be fair, I do not have much bullets, but having some bullets is better than none, I guess. But yeah, and after that, we'll just be patiently monitoring and holding those stocks. This is from my point of view as a value investor, instead of like being a trader and all people who are interested only in the short-term gains. For me, I'm more of like a long-term gain person. So yeah, this brings us to why am I looking at the stock market at the moment? Well, of course, it's very interesting times. But yeah, moving on apart from the interesting times, which everyone should know, there are 4 points that I'm looking at the moment. First point is to do with P2P money lending and how defaults are like part and parcel of it. So the thing is that in P2P money lending, if I would loan out my money to a company that needs the money to do their business, but if they were to default, thing is that money is not going to come back to me. Even if they work out a plan to actually pay back to me, it's going to take probably restructure to 3 to 5 years of repayment, or partial repayment, or worst case, I'm not getting the money at all. Whereas in terms of stocks, moving on to point 2, where they are cyclical, so the prices actually they go down and go up. So it's like a trend, it's an economic cycle. If you don't know what an economic cycle is, go Google up Ray Dalio economic cycles on YouTube. I highly recommend that. It's actually it's actually very useful in understanding how the economy works in cycles and why we need to be understanding of it in order to be an investor which is not tied a lot to emotions. But yeah, with regards to point 2, as you can see here in the Dow Jones Industrial Average, so it's actually one of the key indices in the US stock market. So as you can see here, it actually reached a peak in 1930 and actually got a very drastic fall up to the mid between 1932 to 1933, a drop of close to 90% actually, which is very large. And to see how long of a recovery it took actually from here to around here, which is probably like around 7 years, 6 to 7 years, I guess. So yeah, as we can see here, the stock market eventually recovers, but this is provided that the company that you have chosen has enough cash balance, free cash flow, to actually tank through this cycle of uncertainty and economic collapse. Moving on to point 3, I would say there's no better time to invest than now. Well, not exactly now, but I would say like the time range now, as in from this start of this so-called recession until the full explosion of it. Now, why do I put this as so? Because stock markets are proven, through like historical charts like these, that they actually fluctuate high and low. And we know that in every recession throughout history, like in the global financial crisis, this Great Depression, and other kinds of flus such as MERS, SARS, and all, that it will eventually make a recovery. It just depends on whether we as investors can actually hold on to it long. And what better way to actually hold it than from like close to the bottom, which is around right now. I mean, we can't foretell as to whether it's close to the bottom, but definitely based on many kinds of valuations out there, it's actually been, I'm not sure about you guys, but based on my evaluations, actually, such as discounted, future cash flows, discounted future earnings, a lot of companies are in massive discounts in terms of having a large margin of safety. And the last point, of course, is being passionate about being in the stock market. For me, myself, I like to read up annual reports of companies which have huge potential in making it through the long future instead of just the short term, like 1 to 2 years. I'm looking at 5 to 10 years. So yeah, that's about it for this. Thanks for watching. Do like and subscribe if you think this content actually make you really think of like your investments currently in a portfolio. For me, I'm just thinking of more like a consolidation into the stock markets after being experimenting with different kinds of investment tools out there. So that's about it for now. Catch you later next time. Future turbulence. See ya.